So is a recession, U.S. recession coming, in your view?
Well, that is our central scenario, expectations. Because with interest rate hike for so much over last 1 year or so, I mean, at this type of level, and also with high inflation persistent for such a while, so I would expect that the recession is coming in U.S.
Okay, is the U.S. equity market, what do you think about valuations there? We're going into earnings season. Does it look properly priced?
Well, actually, for U.S. equity market, we think that like it has priced in a soft landing, a very more friendly recessions. But actually, the chance is the risk is for the recessions to come in harder than expected. So we think that's why we think that for the developed market, U.S., Europe, we expect a choppy water type of scenario, very more difficult from now onward, or will be a more choppy water situations. And yeah, we are more cautious. Yeah, about valuation is more expensive at the expensive side as well. Yeah.
Yeah, Cecilia, you're not seeing that recession being priced in. You mentioned the U.S. market. You could add U.S. high yield to all that. Credit spreads are still quite tight. I mean, if your assumption is true, what looks misplaced to you when it comes to risk assets, and what is the most vulnerable to some sort of reversal now?
Well, I think take it this way, with the recessions coming, we expect the yield curve, U.S. Treasury yield curve to move down. So that will be some positive impact on the risky asset. But however, overall, you will come into valuations as well. Say for U.S. developed market, we think that valuation is at the expensive side. And however, I think for the EM side, for the emerging market, China, for example, India, we think that there are more. Yes, especially for China, the valuation is cheap, and we think that there are more room for it to appreciate from here.
Okay, the China call is interesting, right? I think you've been holding out on this kind of bullish call in China for some time now, Cecilia. I mean, at what point does this get a bit too costly for you? Is it just a matter of patience that we get some stimulus and these markets can turn around?
Yeah, well, I agree that the market hasn't, the market recovery or the economic recovery hasn't come into the type of level that we expected yet. But however, we maintain an optimistic view that, say, with China, we know that the government will give more stimulus measure, and that will help to support the property market, the growth from here to help the pace of recovery as well.
So too cheap to ignore China?
Too big to ignore.
So it's not too cheap yet?
Yeah, it is like, we should keep it. I mean, like, we maintain an overweight and optimistic view on China because it's an important market to us. Yeah.